Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Tilray Brands, ticker symbol TLRY. And so here I am recording this on the evening of Thursday, October 5th. October 10th, after Tilray closed on the day at a price of $1.59, being down almost 2.5% on the day and continuing down by about a penny in the after hours. And so, yeah, I wanted to go over the chart because it was earnings day, which happened this morning before pre-market, and at the start of the day, we can see that Tilray, not during the pre-market, but right at market open, dipped down to around $1.40 and then came back up and barcoded around 158, 159 all day. So, kind of a dramatic start to the day, but overall, nothing too crazy going on with the chart. It's just hanging out down here. But some things did happen that I think are pretty significant. One being that the close is below $1.62, which was this prior low over here. And as you can see, we definitely have put in a lower low, even if we're including this $1.50 low here, which my understanding is orders did not get filled then. So, we can neglect that. But either way, 145 is a lower low. And that did go through my stop loss level at $1.60. So I'll talk about that at the end of the video. Overall, I'm, happy with what happened. I'm fine with it, I should say, I guess. I could be happier. But really, this was an exercise for me in managing a stop loss. And, there were some things that I could have done better, but I did not want to chase a falling knife, and, it didn't turn out to be a falling knife. And what we see here with this candle for the day, a big wick to the downside and closing in, I believe the upper quarter of the trading for the day. It might be the upper third, but, I'd say that's probably the upper quarter. And so that could mean that this is a bottoming tail that the bottom is in, just like, we saw the same kind of pattern over here when we saw that wick down to $1.50. Price did go up following that by about 11%, but then of course did come down to current price, which is around 11%. Pretty crazy. I think it's 1092 to the downside, and then to the upside 1092. So very, very odd there how sometimes things work out like that. But yeah, we closed below both of these purple lines. This would be a confirming close, breaking below not only the dashed one, but also that solid one, which does go back to, let's see, I went over this in last night's video, but it goes back to the low from June of 2023. And then the other pivot point is the low from June of 2024. I guess those are, good dip buying. It's a good dip buying month, the end of June, as far as the past couple Junes go. But yeah, so I think that this could be putting in a bottom, but, I'm glad that my stop loss was filled rather than, clinging on to hope, just because I want to be in and out with this. I still do have calls. And so, I'm going to see what happens with those. I'm kind of debating what I should do with them because I kind of broke one of my rules, which I'll go over. Oh, yeah, and I should mention this video, I'm going to be going over some of the unusual whales options data, options, calls, puts, whatever. They're risky. So, I'm not recommending doing any of that. I am really just trying to get more tactical with my trades, and I saw this one as a nice trade with a good stop loss level being basically the low over here from September 6th, which was 162. So I set my stop loss a little bit lower than that at 160, and that of course was filled at the start of trading today. And, so I did mention this in last night's video that, this did look like, because it had been testing this lower portion of this wedge, that it could be a descending triangle rather than a wedge. Descending triangles do have, a flat bottom with the top descending like this. And because you get multiple tests of the same price over and over, that tends to weaken and it tends to break. And so that's what we did see. But with this pattern here, I do think that it could be forming a bottom. Also looking at the MACD here, that is getting redder, more negative. Maybe we start to see that turn around, and then the bottom is in. And also considering the RSI, that is at 35.10. So, 30 is this yellow dotted line that you can see there just above the cursor. And, that is the oversold territory. We are not in there yet. So I do feel like, while this does look like it could be a bottoming signal, it did get multiple closes below, all of these levels up here. I guess all these purple levels. This is the second close below the white line, which I have drawn at, I think that's just a trend line, and that did get fudged a little bit. So take that one with a grain of salt. But we did close for the first time below the red line at 162. That is closing lower than this prior low. So I think there's just a lot of weakness in the chart. The MACD has not started to flip around. And so today it was negative 0.00958. And so that's been getting more negative. And I'll try to look at this every day moving forward to see if this does flip to less negative. But this is probably my last video on Tilray for a while, just because, I need to go over charts and, earnings happen. And so my play has more or less played out. And now it's just kind of a waiting game until November 15th, unless I do decide to trim or cut losses, which I will, again, go over at the end of this video. RSI, I think that could be going below 30. And so, with that, I think that the price could be coming down more. And also, with the larger amount of volume traded, the past couple days, and with this big down, well, I guess really, yesterday was down 1.21%. Today, basically double that. And, more volume traded on these days, so I think that does mean that this could still be going lower, and so that's why I'm happy about the stop loss being filled and that I didn't chase a falling knife, because I think I may have the opportunity to buy back at a lower price, but not in such a dramatic fashion like what we saw here in the first 10 minutes of trading for the day. Pretty crazy. And so I will come back to that, talking about what I did at the end of the video. But I also did want to mention that I had hoped that this was a wedge, that it would be breaking out. But really, I think this is a good lesson before earnings. If we do, see a bottom level be tested and starting to close below some levels, while it might be at a discount, just showing that weakness before earnings, kind of a bad sign. What we wanted to see is some strength, maybe a bounce yesterday, closing above that purple dash line. That would have been really nice, a little bit more compelling to suggest a buy and go long. And this does make me think that I was considering yesterday buying a put, and let's see, just out of curiosity, for the November 15th expiration, $2 strike. I would have bought that at around 45 cents. Now it's at around 49 cents. And, I think earlier today it was around 55 cents, so I could have made about $10 swinging one of those contracts, or, just $4 right now. Buying it, though, at 49 cents, but then to sell it at 34. So actually, maybe I would have lost money on that. So I would have really had to be in and out. So I'm glad I did not try to hedge against my long position, because I think that might have just been, a losing battle. And I do think that it could be going up to $2. I do think that it will be going up to $2 a share, but at this point it might just be kind of a waiting game. And actually, one thing I was thinking about, I drew it earlier on the chart, but I took it down because I wanted to draw it, during this video for you guys. And so I'm just going to get the parallel channel tool. And so I'm just going to connect the low of 145 from today. And let's see. I guess I should, skip this 150. I feel like the consensus is that was not significant. And also, guys, let me know if you were able to get some orders filled, around 150 today. Because if that's the case, then, I feel better about this low and using it as an anchor point, or I should say a pivot point. But yeah, I didn't have any orders filled around 150, although I was very tempted to do that. And so let's see, I guess I'll do it with this pivot point over here. So it's 145, and this one I believe is 161. And then if I just go up to the tops over here, we did get some blow off tops going above that channel. But I do think that looks fairly significant that we did get, almost a test of it here. And yeah, so maybe this is one to be paying attention to, and that could correspond with some resistance right around like 185, 187, somewhere around there, 190 with all of these lines here. So yeah, I'm just going to lock that into place and check the high over here, which was 198. So I'm just going to make sure all those pivot points are correct. 198, 161, and 145. Yep, and so I might actually, just to make this stand out a little bit from the other ones, I might make this, for me, I just find the light blue to be kind of a very soothing color, a very soothing tone. So, that I kind of view as, over here, all being approximate. I could drag that up here and that would intersect with the tops over here better, but I think that's kind of more of a conservative estimate for a top right here where we got this confluence of levels there. So that does kind of make sense. And so, yeah, I would look for us to be holding above this downtrend and, really getting some closes above 162. The fact that we closed below 162 today makes me think there's a lot of weakness. And yeah, and on the note of weakness, I didn't listen to the call, but my understanding is that their earnings were a little bit disappointing. I think that they've been burning a little bit more cash than they had anticipated. So, earnings were not excellent for them, but I think that as far as the alcohol sales go, I believe that the company is getting better. But again, I didn't really pay too much attention to it. I'm not a fundamental trader. I like, drawing different colored lines on the charts. That's how I like to trade. Earnings calls, in all honesty, they kind of bore me. Yeah, I just don't retain that kind of information. It just goes over my head. I'm much more of a visual kind of person. But anyways, speaking of the visuals and having gone over the chart, let's now switch over to unusual whales. So this is the Tilray overview for today, October 10th. We got a volume of contracts, calls, puts, all of them traded today. A volume over 56,000 with a premium of over $800,000 traded today, with a net premium of a decrease of $68,000. And we can see here that the underlying stock price, started lower, but then went up and then just bar-coded throughout the day. So not really too exciting there. And then there were a lot of calls bought. People were buying the dip here. So I think that's really, really good. And, I must say, I might have been, I was a person buying the dip here, but kind of unintentionally. And, I could have bought better. But I didn't want to chase a falling knife. And, so I could have played this better, but I didn't, chase a falling knife. I think it's dangerous to do that. And so, I'm happy about that. I think I'm in a fine position. With my position, I'm risking less than $100, although I did put more than $100 on the table. I'll share that with you guys in a minute. But here, looking at the contracts, we can see puts. We got 9.5 thousand contracts traded today, whereas calls, we got over 46.5 thousand. And then if we look at the premium puts, we got $143,000, whereas with the premium on calls, over $660,000. So much more on the call side. However, if we do scroll down here, we can see that the majority of the contracts traded were on the bearish side rather than the bullish side, although it is pretty close to a 50-50 split, so nothing too crazy there. And then now that I'm getting a little more familiar with this, I'm just going to scroll down here to the hottest contracts first, looking at the highest volume, then looking at the highest open interest. And so this is the one, that actually, no, that's not the one that I hold. Sorry, I saw the 11. I thought November. I am not holding this one. I'm not holding a strike of 150, but we can see that for this upcoming, Friday, so tomorrow on the 11th, expiration of $1.50 calls, lots of sells there. So that's not looking so great. We can see that the open interest was about 10,000, but the volume traded was just under 8,000 with 75% of those. So that's about 6,000 of those being on the bid side or being sold. And so I would expect this number of open interest to drop to around, 2,500 for tomorrow. And I suspect that, these calls might be expiring in the money tomorrow. I suspect that they will be, but max pain is $1.50 as far as what I looked up yesterday, and I can actually pull that up real quick here. Let's see, I got Tilray up, and for this Friday, yeah, max pain is $1.50. So kind of risky holding those calls, because I think that this premium could just go to zero, if they do close at $1.50, that premium is basically zero. It's really just like the difference between the strike and, whatever the price is. And so, yeah, I feel like it's kind of a good idea to dump those. $2 call for not this Friday, but next Friday. That is like OPEX for monthly contracts for October on the 18th. 8 days from now, that's a $2 strike. Looks like there were more buys of that. And that one seems a little bit risky to me. It looks like the open interest was, close to 29,000 at the start of the day, but then an increase more or less of probably around 4,000 contracts. So I'd look for this to be around 33,000 open interest tomorrow. But again, that's just a week away, so I feel like that one's pretty risky. $2 call for January 17th. That seems like a much safer bet because it is 99 days away. And we can see here, though, that it was the majority on the bid side, so people selling those. With, let's see, about 60,000 contracts that are held open interest right now, but there's probably going to be a decrease of, let's see, maybe 1,000 contracts. I don't know, this mental math, the 60-40, that's, I'm not great at mental math. So, I'd expect that open interest to go down tomorrow. And we have the $1.50 call for next week, more on the buy side, over 9,000 contracts open, and, about 2,000 bought, 2,000 sold, so that's probably going to stay about the same 9,000. I feel like it's a safer bet for next Friday than the $2 strike just because price is right around, getting pretty close to $1.50 now. And then so this contract is the one that I hold, $2 strike for November 15th. Majority on the ask side, so that makes me feel pretty good. But, given that the price did drop below 162, I don't feel that great about it. And, so got the open interest here of 18.5 thousand. And, maybe that's going to go up a little bit tomorrow, but probably not too much. And I will dive into that one a little bit more. And then here, the next one down here is a put, the $1.50 strike for this coming Friday. Majority on the bid side. So that being about 4,000 contracts or so being sold, a little over 4,000 and a little over 2,000, I don't know, mental math, being bought. So I would expect this. Oh, wait, sorry, no. This is open interest, 6,600 there. So as far as what was traded today, we got about 2,000 being sold, 1,000 being bought, and so I would expect this number to go down to about 5,500 or so, 5,600 tomorrow. And so that is saying that, these people are less confident that it's going to be closing below $1.50 tomorrow, even though that is max pain. I think that whether it's the call up here or the put, I think those are very risky to hold. So it does make sense that people were dumping both of those. And then, these other contracts, I'm going to just kind of skip them because I don't want this video to be too long. I kind of want to talk about what I plan on doing moving forward at the end of it, which is going to be, not doing these daily videos just because they take a lot of time. I do think it is informative. It is useful for me, but I think I need to make some videos on some other stocks. Also, I'm working this weekend, so, I'm going to be spread kind of thin. And I got to do my AMC video tomorrow, and I'll probably do a GameStop one as well. I'm excited for those. Maybe the bottoms are in. Anyways, the highest open interest contracts over here. Again, that $7 call for January 17th, 73% on the buy side. And so hopefully those people were buying the dip at the start of the day. And and then as far as these, I don't want this video to be too long, so I'm probably just going to skip over those. And my contract is, right here. And that's, I don't know if that's 10th or whatever it is on this list. It's not super popular, but I didn't necessarily get it because it was popular. I got it because it was kind of safe being more than a month out, 36 days out. So I feel good about that. And so with that being said, let's flip over to that contract. So here we have the Tilray $2 call strike, the $2 strike call for the expiration of November 15th, which is the monthly contract expiration for the month of November. And we can see here for today, October 10th, volume traded was 3.6 thousand with an open interest of 18.5 thousand. I do believe I just went over this. The average fill for today, it looks like it was 0.06 cents. I ended up buying one on accident higher than that, and then I put on the brakes after it. And so the premium traded today was 23,000 for this contract. We can see 1.5 thousand on the bid side, 2,000 on the ask side. So again, I think that this number will go up, as we did see it go up from yesterday by 508 contracts, going up to 18,509, which I've already talked about. And so, this just keeps going up. So I do feel good about that, but that doesn't necessarily mean that, the stock price is going to be going up. As we've seen the past week and a half, it's just come down. And so, yeah, rather than elaborating on this, because I have gone over this stuff in the past, really just a lot of call action at the start of the day and a little bit of, buying these calls at the beginning of the day, but then kind of trimming a little bit throughout the day. And so, yeah, I just wanted to go over what I did, which, I could have handled better. I could have had a little bit better of a plan, but, that's part of, what I'm doing here with this is, I'm learning how to handle this stuff better. And so what happened, I'm going to switch over to the 10-minute time frame to go over this. So what happened is, I saw price trading around $1.62. I saw it wick down a little bit. I did have an order placed yesterday for 90 shares at 162, but that was not filled, even though we traded around 162 yesterday. Then I saw these wicks down. It's like, well, we're wicking down, but we're still, above. It's not too dramatic. As those earnings come out, we can see here loss narrows as alcohol beverage drive revenue growth. So, it could be looking better, but, it could be looking worse. So, yeah, I feel fine about the company and stuff just with this move. So what happened is with these wicks, I was expecting more volatility in the pre-market. We didn't see that. And so I said, oh, well, I'll replace that order. I'll buy, 90 shares at 162, and then I'll just up that stop loss at 160 to 100 shares, thinking that, the low was in, because we did hit it, at, let's see, this is East Coast time, around 7:10. We hit a low of 160. So I thought that was in. I thought that I might be safe. And so I was actually not. And so I'll share with you what I did with my shares. And so this is, my position that I no longer hold. So I had that initial position of 10 shares at 169, and I had just been thinking, well, hopefully 162 is the low. We haven't crossed it yet. So, I'm going to just say, I'll buy 90 more shares, and then I'm risking, like basically $2 more than, the 90 cents I was risking initially. So, why not? I'll just up that stop loss right after open. This is Central Time in the spreadsheet. That was filled at 160. And so I cut the losses. And with that, I had talked about this in yesterday's video, kind of this idea of, cutting losses at 160 and then maybe buying back at 150. I thought about that. And after seeing it come down to, 145, it took it a while to load on my screen just because it was such a fast move. And I was thinking, well, maybe I could buy back those shares at 150. And as of right now, I do have a buy order for 100 shares at 150, but I'm probably going to delete it. Part of the reason is because I have this alert now at 150. So if we go to 150, I can then assess, is this a falling knife or is this a dip that, I want to get back into? And for 100 shares, that's saving me $10, so it's not really that big of a deal. But I think that this is a really nice example of maybe how to utilize a stop loss. I had one at 160. And I had talked about, well, I could buy back at around 150. And so if I had the stop loss at 160, I could have already had a buy order at 150 place. I didn't do that. And so if I would have done that, that would have been filled. I'd be saving, $10 on these 100 shares. And, I'd have a loss of less than $3, which since I'd be buying back, that would be a wash sale. I wouldn't be able to count that as far as a loss for tax purposes. But, I think that that's kind of a way that, the game is rigged against us, is rigged against retail in that, if I feel that if it hits 160, it's going to 150, then what I should do is have a stop loss at 160 and then a buy order at 150. And, maybe that's more than 100 shares. Maybe that's 10,000 shares. So that's a loss of $300 versus, $3. And so, that's a little bit more notable. But, I would then be getting the same amount of shares for $10 less money. So while I might have this effectively paper loss of like $3 or $300 if I'm talking about 10,000 shares. And so, I think that that's kind of a way that like the system, the government, the IRS, whatever taxes, trick us into thinking, oh, well, I don't want to buy back because then I'll have a wash sale. But you'd still be in the position of Tilray if you want to go long with it. And then you just have, you'd be saving money because you'd have 100 shares at, let's see, in my example, it's 100 shares. So I won't think about this as 10,000 shares. But so like for me, if I have 100 shares at 163, like I did have, and then I cut losses at 160, I lose $3. But then if I buy back at 150, I then, have those shares back. And, my average is 150. Or, you could say 153 considering this loss, and that's a lower average than the average at 163. So I think that would have been a really good way to play this. But, I do feel like this might bleed some more. So I, am probably just going to rely on the alert, and then I'll reassess, maybe buy back shares. And, while I do not have shares, which for me, there's no ticking clock with them. I could hold them forever, and then I'm just holding, $145, or this is, 100. This is over $150, just on the side, and it's like, it's like 155, and so I don't really like that. I don't like just holding for the hope that it's going to go higher. And, then that's just like keeping $150 on the side when it could be in plays where I'd potentially be making money or losing small amounts of money like this, but learning, which is a valuable thing. And so I appreciate what I've learned from this. And so, yeah, I mean, I will probably reassess if price dips below 150. And what I will do, since the stop loss was triggered, my plan was to cut half of my calls at a loss. And so what I did, I'm actually going to move this back over to my other screen so I can pull up the other one. So what I ended up doing, I meant to cancel it, but I forgot about it. I had this other buy at 8 cents, so I did add to my position. I now have 8 calls with an average fill of 10 cents. These are the $2 calls that expire on November 15th. So I got a month, more than a month, so I'm not too worried. I am risking $82 on this, plus I've already lost $3, so I'm risking, $85 effectively on Tilray, which is not really that big of a deal. If it goes to zero, my life's not going to be ruined. It's just, an more expensive lesson learned. And so what I had talked about doing is that if my stop loss was filled, I would, cut half of this position, so sell 100 of them. And since I had just bought this one at 8 cents, my thought process was, I'll sell 4 contracts, 400, here of this 800 at 8 cents. So that's accepting a 20% loss, which for these at 10, it's basically $10 per contract because it's 10 cents times 100. That is a loss of $8. That's not really a huge deal, but that just prevents me from any further loss on those 4 contracts if price does bleed. But then I would be holding the remainder to see if price does skyrocket to $2 a share. Maybe what we saw today is a spring and we see this, really launch up to $2 a share. And then I could make money on the calls that I would still be holding, these 4 contracts here. And so I could potentially make back what I had lost. And so, what I have placed now as far as these 8 calls, I'll just read them to you from my phone. I just need to get my face on there. And yeah, so I'm just going to pull it up here and I'll just read it to you guys, and I'll go over the options table as well. So I have a sell order placed for 4 of these contracts, so these 4 at 8 cents. So this one getting back at break even. This one I'm taking, a 10% loss on it. And these 2 taking a 20%, but based on my average for these, that's a 20% loss. That's $8 lost. That's not really that big of a deal, but then that does lower my risk if this does continue to bleed, and I do have potential to make that money back. And so my other limit sell orders are still the same as they were before. One is for 14 cents, so I'd make $4 back with that. And so that would be half of what I'd lose from the calls that I'd sell at 8. One is at a limit of 15 cents, so I'd make back all from that, and the 14-cent one, all of what I had lost on the calls back from those plus $1. And then the other limit is at 16 cents, and so I would then net, let's see, about $4 from those, and I'd still be holding 1 call contract, which could go to zero, but that'd only be risking $10 on that, and I just hold to see what happens with it. And so, I was thinking I'd cancel or adjust my limit sells at 8 cents for these 4 contracts, but I'm probably just going to keep them because I'll hold the remaining 4 to potentially make back what I had lost, and then to hold the last one to see, maybe it goes up to 20 cents. And, that's a nice 2x on that one. And I've made back all of what I've lost in that scenario. But yeah, this did not go the way that I was hoping it would. But, also in last night's video, I did mention, if I were to, I'm just going to cough one. If I were to, do this trade with more money, let's say if I have a larger account, let's say a year down the road from now, would I put, $1,000 on this or $10,000 on this? No, I wouldn't have, because the chart just wasn't clear to me. It looked like, we were in this descending triangle, getting lower lows, and that ended up it being what happened. While I did hope that we'd be getting a breakout from the downtrend here, that did not happen. And so to me, it was 50-50 being more on, I'd say it was like 55 bearish, 45 bullish. And so, or even if it was 50-50, that's not enough for me to put, $1,000 on this. And so, yeah, I mean, if this does dip to 150, maybe I'll buy back 10 shares, reevaluate, maybe I'll get 100 and sell a covered call with the strike of $2. And so, that could be a nice, 33% swing if that does happen, going from 150 to $2. I could definitely see that happening. I could definitely see the stock price going well above $2 a share. But for me right now, wanting to practice getting in and out of trades, I'm glad I'm not holding any more shares, because I will continue to monitor it and see about 150. As far as the calls go, I think that I'm managing my risk. And so I'm happy about that. Rather than cutting my losses at like 7 or 6 cents today, I think that this will bounce a little bit more, but maybe it's a fake out bounce. And so I think that those 8-cent orders will get filled. The other ones may not get filled. But then, I am just risking, at that point around $41 rather than 82. So I think that's a better way to play it for me. Again, I don't have a lot of money on this. And, I do, looking at the chart now, I do kind of regret not, doing a quick buy at 150. But I feel like the second I end up doing that, it's going to end up bleeding. You buy it and it keeps going lower. You don't buy it, it goes up. And so with this, I didn't buy it. It went up. But I do think that it looks weak, and so I'm going to continue to monitor it. I may not do a video on it. I might post some screenshots to the channel. I do share more trades, with members of the channel. So if you do want to follow Tilray stuff, it's 99 cents to become a member of the channel. I might just post this stuff, to the channel, to the public. But for me personally, I don't really like going so open with my trades. I feel like, I get made fun of for having such small position, but that's really just to manage emotion, to manage the stop loss. And that wasn't filled during the pre-market. And so I think that's a good lesson, that stop losses only filled during market hours. And, if I have a stop loss, what's the buy back level? 150. And so, I think that would have been good for me to have planned that out. Or laid that out better beforehand, because I was too late to buy 150. But, like I said, I'm just going to evaluate that as time goes on, so I'm not worried about it. And, long term, I feel like Tilray's going up. But I feel like short term, it could be bleeding. I mean, because, now, it's like we could look at this in different ways. This is a wedge here that I had drawn. That turned out to be a descending triangle when we broke lower. Now, I mean, it looks like we got a falling wedge here, which is a bullish pattern, but we might get another test over here. So maybe by like November 15th, we're around 142, 1420. And, maybe that's a good time to buy the bottom before we actually get a legitimate test of a breakout from what would then be, this downtrending wedge. And so from there, let's just get the measurement tool. If this is, to be around, 420 right there, and then to come up to this, that's a 6-7% move, and then to come to that parallel channel, that's a 28% move, going up to $2, 40%. So I feel like that's a safer bet. And so what I might do, considering that, looking at the chart, If it goes down to 150, maybe I'd buy 10 shares. And that would just be to keep me engaged with it, because I may not check this every day with work, with life. You know, it's tough to keep up on this stuff. That's why it's been nice doing these videos. I just got to switch to other stocks. Otherwise subscribers, you know, are going to probably hate me. But yeah, I mean, I could see buying a small position at 150 just to keep a closer eye on it if it does go lower. But I think $1.420, there's some legitimate upside potential there with a nice breakout. I just think that's probably a month away though. And so, yeah, I mean, I think that this is probably going to bleed. And so, you know, I'll probably keep those orders with my calls as is. But maybe I won't. If I do change them or if they do get filled, I'll probably be posting that to the channel. If you do see them, screenshots, make sure you like them. If you don't like them, I may not share because, you know, it's just sharing my stuff. If people aren't interested, you know, it's fine. I'm just going to do what I'm going to do. But yeah, I mean, I think that this was a great kind of case study in using stop loss risk management. And I mean, you know, I was asked, why would I want to sell at 160 if that's low? I mean, even if I buy back at current price, whether that's 159 or 158, which is the after hours price, you know, that's lower than what I sold at. So I'm saving $1 to $2 there. So that's some savings. And so, yeah, I mean, I think that stop losses are valuable, but I think it's good to, you know, have a secondary level that maybe there would be some support at. You know, if not, if there isn't anything that could be secondary support, then just reevaluate. And so that is where I'm at with 150, but I said that enough times, so I'm just going to end the video. As always, you know, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below. Let me know how this trade went for you. Hopefully, you know, not too bad because it was, you know, kind of disappointing, but hopefully this is viewed as discount territory. But yeah, I am really intrigued by $1.420, you know, basically a month from now. And so maybe that would be a time for me to, you know, have a more bullish play and maybe do another series like this. But anyways, thank you so much for watching. Thank you for joining for these. It's been a really nice learning experience for me. And, you know, I have been doing other plays like this where I have stop losses, again, very small positions. But I think that's just a better way for me to get into trades and get out of trades with profit or with a small loss rather than just continuing to buy as things bleed down and not take profits. And so, you know, for me, I want to be in and out of trades. And for this one, I am, you know, majority out as far as, you know, having had 100 shares earlier today. Now I just have 8 contracts, and I suspect I'll be trimming out of half of those at a 20% loss tomorrow. No big deal. And then the other ones, I'm hoping for price to go up to 2, but if it doesn't, 142 a month from now seems really appealing. But anyways, take care, you guys.